So the total number of banks in the US has shrunk from 8,500 to 5,500 in the last decade. But the biggest banks have been resilient. Those with a market cap over $100 billion have only gone from 5 to 4 in number, and their total market cap has risen. JP Morgan's more than doubling. The same is not true outside of the US. There were 13 banks outside of the US over $100 billion in market cap in 2007. There are now 8. And the total market cap has fallen from 1.8 trillion to 1.3 trillion. But China's resilience and Canada's growth hide Europe's plight. There were 8 banks over $100 billion in 2007 in Europe. Today, only 1 remains. HSBC remains in that size. What about the workings of the banks themselves? Balance sheets are far stronger, with both capital and liquidity levels much improved, thanks to stronger oversight and regulation. More on that topic tomorrow. Returns plummeted post-crisis from a pre-crisis average peak of around 15% ROE. Higher capital levels are a key factor weighing down ROEs since the crisis, but they're now back to double digits. The average last quarter was 12%. The saving grace for that recovery in returns was that costs are down dramatically, particularly in the last 5 years, thanks to closing of branches, exiting certain regions, and using technology to drive efficiencies. So for all the scares 10 years ago, the big US banks are doing remarkably well, certainly relative to Europe.